Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is packed with Black Star events, from Swiss inflation reports to Canadian unemployment rates. However, the most important report of the day is the US non-farm employment change report, which will be released at 2:30 South African Standard Time. This report is the big daddy of all fundamental indicators and will undoubtedly be the primary focus of today's trade. But wait, there's more. We're also giving away a limited edition branded mug. All you have to do is like this video and comment the answer to the following question. What is the biggest driving factor behind currency trends? Is it A, export rates, B, gross domestic product, or C, interest rates? Don't forget to subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar rose against the euro after the European Central Bank eased its pace of rate hikes. Meanwhile, the Federal Reserve hiked rates by 25 basis points and indicated that it may pause further increases. The market reaction was relatively subdued, as traders bet the dollar's interest rate advantages over the single currency would continue to decline. However, analysts said that most of that expected move may already be priced in, with the next focus likely to be on when the US Central Bank will start cutting rates. Now let's take a look at the analysis on GBP USD. The cable is currently hovering just within that primary resistance level. If we get a close below the resistance at 1.259, we could see a decline back down to the bottom of the channel. However, a break above and a close above 1.263 could trigger a rally all the way to the top of the channel. Moving on to Wall Street. US indices declined for the fourth consecutive session amid continuing banking stress, while market participants monitored earning results from tech giant Apple. A new wave of turmoil in regional banks has disrupted trade desks worldwide, leading traders to increase their bets on Federal Reserve interest rate cuts due to growing concerns about the next financial crisis. Recent trading halts within the financial sector have impacted Western Alliance and PacWest, both experiencing losses exceeding 60% for each stock. This turmoil has spread across various other banking institutions, large and small alike. The Dow Jones Industrial Average fell 0.9%, the S&P 500 dipped 0.7%, and the Nasdaq fell 0.5%. Let's shift our focus to the Nasdaq 100 analysis. US tech is currently hovering just below that resistance level. A close below 13,000 could trigger a decline back towards that previous support. However, if we break and close above 13,100, we could see a rally all the way back up to 13,300. Moving on to commodities. Oil prices rose, but were unable to claw back much of this week's more than 8% decline as demand concern in major consuming countries continue to weigh. Prices have plunged this week on concerns about the US economy and signs of weak manufacturing growth in the world's largest oil importer, China, sliding further after the US Federal Reserve raised interest rates on Wednesday that capped near-term economic growth prospects. However, the market has seen some support from the Fed's signal that it may pause further rate increases to give officials time to assess the fallout from recent bank failures and to gain clarity on the dispute over the rising the debt ceiling. Now let's take a look at the analysis on crude oil for today. This commodity is hovering just above that primary support level, very similar to yesterday. A close above $70 a barrel could trigger a rally all the way back up to that previous resistance at 74. However, a break below the support with a close at 67.1 could trigger a decline back down to 64. Lastly, let's finish things off with gold. Bullion prices are hovering just below record highs as traders locked in a measure of recent profits, with markets remaining cautious ahead of key US labor data that is widely expected to factor in monetary policy. Looking at the technical analysis for gold for today, the yellow metal is currently trading within a relatively tight range, and a break below 2044 could trigger a decline back down to the support. However, a break above 2054 could trigger a rally all the way back up to that record high point.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.